Good afternoon and welcome to beautiful downtown Grand Forks. This is the time and place for the Growth Fund Committee. We'll begin with roll call.
Crary?
Here.
Doppler? Holt?
Here.
Kwame?
Here.
Weber?
Here.
Whitney? Wolf?
And Mr. Wolf has just joined.
Here.
Good.
Here, can you hear me?
We sure can.
We have
Thank you,
four.
Mr. Wolf.
Thank you.
The first item of business is then to the election of chair and vice chair for the upcoming year.
I would move to keep the same chair and vice chair.
Very good. We have a motion.
Second.
We have a motion and a second. Any further discussion, questions, comments? Hearing none, all in favor signify by saying aye.
Aye.
Aye. Aye.
Opposed, same sign. Motion passes. Very good. Item 3, Accelerate Loan Program Convertible Note Policies. Ms. Richards.
Thank you, Mr. Weber. As you can see, the bulk of our agenda today revolves around Accelerate Loan Program. So we do have 2 staff reports. It is a little difficult to separate, conversation on one from the other, but we will attempt it. We have, as staff, we listened to the conversations about how the mechanics of a convertible note should work, and we've had numerous discussions on. Here we go. Right behind me, we have Greg Serp, who's with the SBDC here in town, who is a little bit of our resident expert on venture capital. So he's kind of contributed to the content of the staff report and is here for questions, as our staff from the city and EDC.
Very good. Welcome. Thanks for joining us.
Again, we have First Eye, who's been very patient with us, so we would hope that we can kind of come to a resolution on them as well as much or as little direction as you're willing to give staff on the particulars of the convertible note. This has been kind of a priority for the EDC for quite some time, as well as First Eye as their client. So I'm going to let Keith kind of have first crack at the podium. And then, as I said, we'll certainly open it up for questions, and Greg has been very generous in coming to provide support for that. So,
Very good.
That, Keith?
Thank you, Meredith. Mr. Lund?
Mr. Chairman, members of the committee, thanks for your conversation diligence with the Accelerate Loan Program. I just wanted to take a few moments, if I could, sort of back up and talk a little bit about where we started and I do apologize, I missed the last meeting. We were in a group of folks from Grand Forks visiting a career center in Oklahoma, trying to move that initiative forward. But when I step back, I take a look at, we started this conversation many months ago, and taking a look at the Growth Fund portfolio and suggesting that we maybe carve out a small percentage of that to have some higher risk loans that would have a high return. And that high return in our conversation was the diversity of the economy through the growth of technology company and jobs. We were inspired very much by the state's LIFT program, and that program was taking unsecured debt in a very friendly amortization without going through all of those details, and having a return of that investment after 5 years. So that program was focused on, hey, we want companies to try and commercialize technology in the state. And I think, from my perspective, and I think through listening to the conversation, we said, hey, not only do we want those companies to do that in North Dakota, but we'd like to have a sort of a sister program alongside to see if we can support as many of those companies doing that in the Grand Forks region as possible to have that impact. We had a number of conversations at the Growth Fund. Ultimately, you recommended, the Jobs Development Authority approved a program very similar. There's one small enhancement on the Growth Fund front where we were taking a collateral position, a blanket on the assets of the blanket UCC filing of the company, but beyond that it was not secured by a personal guarantee or the like. So that program was put in place and a program description was crafted around that. We then marketed that and had been in discussions with our first applicant, First Eye. Again, as Meredith mentioned, it's kind of hard to separate, the program and the first applicant at this point. So we marketed what had been created and had been talking with that company along the way about what that program looked like, and moved that forward through the EDC and a couple of discussions at the Growth Fund, did some additional due diligence and brought that back. And through discussion, I think rightfully so, the Growth Fund was talking about, is there an enhancement that can be made? We talked about high risk, high reward. The risk was the loan, unsecured, relatively unsecured, and the high return was the fact that we were going to, hopefully through this program, have greater number of companies in the tech space and greater number of jobs. Actually, the conversation started at the EDC. I think one of our ex officio members mentioned, hey, if we're going to have the risk, I mean, maybe we can have the financial return too. So is there a way to structure something like this to have an equity position? Just sort of floated that question, and that notion was brought to many discussions thereafter. So as you, I guess, visited with John and asked your questions and did your due diligence, the question was asked, is there a way to create a greater upside for the growth fund financially? And a question was asked, and I'm not sure if it was Russell, Mr. Crary, or someone else, but that's my memory, was he and his company interested in convertible debt, or would he be willing to provide that to the growth fund? And the answer was yes. And I think much of our discussion since that time has been, how do we do that? How do we do that well? The JDA, as I think you all know, modified the program description to allow for convertible debt to be a part of the program, and that has now been modified. Again, apologize for missing last month's meeting, and a lot of this conversation revolved around, I guess, 3 points from my read of the staff report and discussions with folks. Number one is the discount rate. Number one is valuation cap. Or number two is valuation cap, and number three is exit strategy. And not to negotiate against anything that's been discussed at the point, I just wanted to share sort of my thought process, and again, if you permit me because of my absence to kind of share that with you. In terms of the discount rate, I think it's been pretty well, I don't know if established, but recognized that 20% discount rate is kind of an industry standard for making an investment like this. We've seen through discussion discount rates of 15 to 25%, but really when you take a look at sort of pre-prepared documents or even do some just minor web research, 20% is sort of the number that discount rates default to. So I feel pretty comfortable about that. Obviously you can have discussion, but I think that's right in line. In terms of a valuation cap, my thought process was simply that, at least in how I understand that how this works, and with Mr. Gasser and First Size sort of draft documents that have been provided, that so number one, you made the loan, and you had the option to convert, but no requirement to convert. So you could maintain your position as a creditor the entire time if you wanted to do that. If you chose to convert, you would be doing that in a fashion where you would know what that valuation was. So if you had your debt and you needed to convert it, if they were going through a Series A as an example, and they had established a valuation of $5 million or $25 million, you would make a decision at that time, do I want to convert into our $250,000 investment, assuming a max loan, into that valuation? So you can make a decision at that point. So the valuation cap really didn't enter into my thought process because you were converting it to something known. My understanding of that document, also my read of it, I should say, and Mr. Gasser should certainly weigh in if he feels differently or otherwise, is that you can choose to go back to the most recent round that established a value and convert it at that valuation. So you know what you're converting to. So a decision is made at that time. In terms of an exit strategy, in terms of you choose to make that conversion, and then when do you get out? Again, my thought process, you're entering into that transaction like any other common stockholder. And you're sort of riding with that. I do favor favored nation status, where no other investor has any equal rights than you do. So if there's a preferred stockholder that has an option for a put or something like that, that you would receive those same rights. But in terms of my thought process, again, you've had much more discussion than I have about it, but that's how I was thinking, that you choose to convert, you know the valuation, and you are like any other common stockholder, and hoping for the huge win, and maybe 1 in 5 or 10 will result in something like that. So I just wanted to share that with you. I think Meredith mentioned that Mr. Gasser is available, and I've had some conversations with him, and he's willing to join this meeting at this stage to talk about that policy, if you'd like, in terms of his thoughts and his experience. Some of it obviously is going to impact, a little bit of our discussion about him, so, call him in if you'd like, but he's very willing to do that, and Brandon can send him a text and he could join. When we kind of transitioned to First Eye, we marketed the program that the Growth Fund first approved. And it was a non-convertible debt that was lift terms, 3 years, no interest, 2 years, 2% interest, full payment balloon in 5 years, and he applied for that. Through discussions, he he opened the door and was open to convertible debt. I have to say, through conversations with Mr. Gasser, he's very comfortable to go back to where the conversation started, but is still willing to offer the convertible debt piece. You know, it would be my hope, I guess, because of how the program is marketed and because of, I mean, he wasn't required, his generosity to open up this conversation, that we could find a way to make a recommendation on his application and move that forward to the JDA for consideration, if you were so inclined. And I think that, you know, with a 20% discount rate that's been offered, and, you know, there has been no discussion, and I think he would share with you, that, you know, would look to move that forward if you're so inclined, without a valuation cap and without an exit, you know, prescribed exit strategies to put, or prescribed buyback at any particular time. Sort of my thoughts on the subject up to this point. I think I'll stop there and answer any questions that you have. Just looking through my notes, I think I've covered all of them. Thank you, Mr. Chairman.
Thank you, Mr. Lund. Any questions for Mr. Lund from committee members? Mr. Gavami?
Yeah, so I appreciate your time, Keith, earlier discussing this, and I think everything that you've stated, I think that I can get on board with that. I think when we're just talking about the program itself, the only thing left, I think, that I have unanswered is that let's assume that we have an equity stake in the company, and let's assume that these are really neat companies and things that not only do we want them operating in our community, but maybe we're a customer as well. So as I think about that, you know, what kind of conflict of interest arises if we were to put out a RFP and it's a company we own 1% of or a company we don't? You know, how do we do that, right? So I think that might be something that happens far and few, but it could be something that happens every time. You know, I don't know. You know, it could be something that makes sense. So my one thought is that if we are an equity owner of a company that is responding to an RFQ or RFP that the city issues, that maybe we release the selection of that to a third party. Otherwise, I think I'm completely good with everything that was discussed. But that's just something I want to put to the table. I mean, could we ask our neighbors to the west or the south to say, hey, can you set up a committee with experts to help this selection so that it's not something where we are only choosing the company that we also happen to own 1% of? So just a thought.
Mr. Lund?
Mr. Chair.
Mr. Wolf, go ahead.
Yes, thank you. I agree with Mr. Kavame's thoughts. To me, I'm in favor of eyesight and moving something forward here today. Just to clarify, we got the answer on the convertible debt. We are able to do that. So thank you, Mr. Gosted, with the opinion. The discount rate made sense. We looked into that. That makes sense to me. We understand valuation cap and exit strategies. To me, the policy that the preliminary policy we talked about on May 3rd, there's a couple things I think we should, as a committee, at least just clarify in our mind. We talked about a match, and so a question is, what qualifies as a match? Are we as a group saying that LIFT qualifies as a match? I believe we are, but I think that's one thing we should talk about, what qualifies as a match, quote unquote. The other thing is, with these types of opportunities, ownership typically will put in some equity. I would be in favor of having something that we would shoot for. Maybe it's 15% at a minimum of equity of their capital plan. I believe that based on some quick math, that would work in the motion or the opportunity that's in front of us. But to me, it's what do we classify as a match? And I think we're saying LIFT does qualify. What is a minimum equity position that we feel is appropriate for these? Banking, there'd be obviously require a third. We're not a bank, but we're trying to help. So I'm in favor of less equity, and I'm proposing 15%. And then the final thought on my mind is, what do us as a JDA or as a growth fund recommending to the JDA, how much of this potentially within our own portfolio, how many dollars would we want to be invested potentially out of our portfolio? Do we have any thoughts on that? So I'd be interested in other people's thoughts or comments.
Mr. Lund, perhaps you'd want to take Mr. Gavami's question first?
Sure. Mr. Chairman, Mr. Bromley, I think that makes sense. I mean, there's, conflicts if you're, if you hold an equity position and you're making debt as well, and this is a public fund and you could see that, then that's a whole nother scenario. But, First Eye, in terms of their product, that might be something that might be a desirable asset on municipal buildings. And so I think that sort of clearing the conflict out and having sort of non-biased partners help us with that, I think makes a lot of sense. So if that would be a policy, or I don't know how that we've written into a loan agreement, maybe it's not even necessary, but I think that's a really good thought and something that we should be cognizant of, to not create that perceived conflict of interest, even if it's a very small ownership interest.
Very good. Keith, Greg, you're kind of nodding your head up and down. Did you want to add anything at this time, or?
No, okay.
You're okay. Please feel free to join at any time. Keith, and then the question about minimum equity position, possibly 15%.
I think it's great to clarify that. I will say that, again, I only know what's in my mind, and I only know how I interpret things. So I will say that when we positioned or presented the program, or when I should say and through my discussions and my thought process, was the fact that we wanted to make sure that the growth fund wasn't the only money in the game, and there were others that were investing. Usually it's not how much but how much have others put into it. Is there buy-in from other avenues? So you're sharing the risk with others. Now, I have no objection personal to a minimum equity by the company of, I guess Mr. Wolf said 15%. If you to define that moving forward, we did present it to Mr. Gaster in the former, in that we needed to have at least the equal amount of investment made by others. I haven't done the math. Brandon, Mr. Bombach believes that 15% works for this project. I haven't done that math myself. So moving forward, I think those are great conversations to establish what the pure expectation is. We want a program with some flexibility, but that we can market to companies, and we say, here's the program we have, and we'd like to support you, and we'd like you to grow here, and here are essentially the terms that we're going to put in front of you. So businesses like a certainty to the degree that it can be. And so if we can put something in front of them that say, here's how we define match, here are the terms to convertible debt, moving forward. Those are all very, very good things. So, and then there was a third question, and now I've forgotten that. Mr.
The
Wolf
third
asked.
question has to do about what percentage of our portfolio.
Oh, sure.
That's more of a policy
It is.
discussion. But I'd like to focus on this for a moment. And Greg, perhaps this is a time for you to come forward. We are not a bank. Accelerate Grand Forks is not a bank, and it is not a venture capital program, but it's probably on that continuum closer to the venture capital, was my understanding of our intent. So what would happen in that world in terms of minimum equity positions?
Sure. Thank you, Mr. Chairman and representatives, for the invitation to participate. So in terms of convertible note, where it would fall on that spectrum, I think, is more on the alternative side of financing, which is more venture capital or private angel investment style, rather than institutionals, such as formal banks.
And in that world, what sort of equity positions are normally?
Well, it really
is that
depends.
even part of that world?
Sure, yeah, it really depends on the type of fund or the organization and what their internal strategies are. I would say it varies greatly, organization to organization. With our own organization, we don't necessarily focus in on a percentage of the company that we choose to own. We kind of allocate dollars, and the investment determines the valuation, and therefore the amount of equity that you would get in those opportunities. And oftentimes, again, you're trying to invest in a certain amount of opportunities rather than secure a certain percentage of equity. But overall, the strategy, I think, is to get fair value or a reasonable market value for your investments, so you're not investing in overflated valuations, rather in comparison.
And Mr. Wolf, it was your question, and I've kind of taken it, but would you like to follow up with Greg here?
Yeah, thank you, Mr. Chair. Mr. Syrup, I guess a question from your experience, venture capital, someone with a great idea, and they're bringing together this plan. Would the ownership group typically put in 10 or 15% of equity and then the rest of capital would be in the form of maybe it's some type of state program, local program, but is it your experience to find, would the ownership group put in 10 or 15%? That's what I'm trying to understand from your perspective.
Yeah, great question, Mr. Wolf. I think I understand, and I'll try to answer that. And yeah, generally, yes, you would like the company that you're investing in to have skin in the game, so to speak. So, you know, they're not necessarily at the sign of any struggle, you know, disincentivized to continue where your funds are potentially at stake in this situation. So I can't really say that there's a specific percentage that I've seen in my experience. But I would say 5 to 10% seems more than reasonable in my estimation, which is very much so off the cuff. So for instance, if a company's raising $1 million, if that company, the owners in that company themselves have not invested $100,000, I would probably personally be a little bit more wary of that type of opportunity as if they hadn't invested, in comparison to as if they had invested those funds.
Thank you, Mr. Syrup. Mr. Chair, I guess my thought would be to have within the policy itself, we consider LIFT as part of a match, and we, from a policy standpoint, we look to have 10% equity from an owner. Obviously, we can have discussions if that's different, but I think it would be prudent to try to have some equity, and it sounds like that's what others would maybe see. But those are my thoughts. Thank you.
Thank you. My thoughts were leaning toward the 10% as well. Mr. Lund, could you speak to the issue of LIFT funds as a match and our original intent when we advertised this program and what the JDA approved?
Sure. Mr. Chairman, I'll speak to my original intent and what I think the JDA approved. My original intent, and I think, well, the folks that, my understanding of our conversations was that LIFT would count and institutional investment would count, ensuring that the growth fund was not alone in its investment, to make sure there was at least 50%, an equal contribution by other sources, whether they be the owner themselves, whether it be with a, you know, sort of a quasi-public like LIFT, which is public, or an institutional, you know, angel fund as an example. I think the staff, the program description was written with that spirit, and that was certainly how I had, in my own mind, presented it to you, maybe not as well as I thought. I do like the fact that LIFT would be considered because it shows that there's someone else out there that has said, yes, this is a good opportunity from a technology standpoint. There's good structure around it in terms of the entrepreneurial leadership group, and they see some value in investing in it and some potential upside within the state. And of course, we want upside within the Grand Forks region. So I like that notion. I think if you're taking, I think Mr. Wolf was suggesting that if they're doing a raise of $1 million or $500,000, that, you know, during that particular sort of investment for similar activity, that there would be 10% of investment from the company in that. Not that it all has to come in at the same time, but yet I guess I'd like a little bit of conversation about the time frame of that so we can market that. But I mean, the way I think about it is if a company has a goal of raising, we'll just use the $1 million that Mr. Serp talked about, and maybe they get, you know, that in different stages, but yet it's all driving towards $1 million raise. At some point before we get in our piece, they document $100,000 worth of investment using that $1 million example. But it wouldn't have to come in, hit the balance sheet all at the same time to be a match on the exact day that, you know, Accelerate comes in as an equity, or as debt, I should say, because it initially comes in as debt.
Very good. At
If
this
that makes
point,
any sense.
I'm sensing some consensus around the convertible note. We need to come back to that, but this is the main thing, and then we'll want to address the percentage of our portfolio. Do committee members have any further comments or questions in relation to the minimum equity position and what counts as a match? No.
I just want to chime in really quick. I appreciate
Mr. Curry,
everybody's
please.
work. Oh, yes, thank you, Mr. Chairman. I appreciate everybody's work on this. I know there's some constructive disagreements in the last meeting possibly, and I think it worked out well. I think Mr. Gosted, appreciate your insight, and Mr. Lund, Mr. Syrups, Mr. Wolfs, Mr. Gavamis. I mean, everybody on the committee has had good questions. I agree. I think there's some consensus, and I think we have a better understanding of where we want the Accelerate Loan Program policies to be. And so with that being said, at least I'm comfortable. So I would make the motion to grant First Eye the $250,000 loan via the Accelerate Loan Program and its policies.
That's probably a little premature, but I appreciate the spirit and I like the can-do, get it done attitude. We still need, the item that we're currently working on the agenda is to come to some clarity in terms of these issues around minimum equity position now and what counts as a match, and then possibly even a discussion about the percentage of our portfolio. Is there a motion that you'd like to make in regard to any of those issues, Mr. Crary?
Yeah, sorry, maybe jumped the gun. So I guess with the consensus, so maybe the formal motion to accept the proposal of a 10% equity stake by the applicant. Would you like them, Mr. Chairman, in separate motions, or can I kind of jumble them all into one policy?
Go for it.
Yeah, since it's all related to the same policies. So the 10%, the discount rate, and again, my understanding is all of these are the policies, but of course there's always flexibility given circumstances, but with a 20% discount rate, as well as lift funding counting towards a equity position.
Very good. We have a motion on the floor. Thank you, Mr. Crary. Do we have a second?
I'll second, Mr. Wolf.
We have a second, and now we can open that up for discussion. Mr. Kafami, please.
Is that the motion that clarifies what was just kind of said over the last few minutes? Are we good on that?
That was
Dan?
my understanding. I believe the motion included the 20% discount rate, a minimum equity position of 10%, that we would accept LIFT as acceptable for matching funds. Was that your intention, Mr. Crary?
Correct. And if we can add languages in the policies, to Mr. Kavami's point, if there is any language on conflict of interest, so that it would go to a third party.
If I may.
Okay. Mr. Holt, please.
We have a motion and a second, so we can discuss.
We're
that, right?
discussing it
Okay.
this time, yes.
I was just going to follow up. I think that was the one piece, taking off of Mr. Kavami's point about conflict of interest. If we could, and I don't know, Mr. Gosted, a couple of questions. I might put you on the spot here. I mean, and maybe one's legal and one's ethical, but thinking about the conflict of interest piece of it is I think I know the answer to this, but is if the JDA owns the equity position and the JDA is not the entity issuing the RFP, is that enough of a shield for conflict of interest purposes?
I don't think so, for the reason that the members of the JDA are also the members of the City Council. And there are, in some other research that I've done, there are Attorney General's opinions that suggest that the JDA may be an alter ego of the city. And because of that fact, I think there may be some issues if this entity that you're investing in, that you're a shareholder in, is coming forward seeking to sell something to the city. I mean, I think you have to wait for that event to occur. And then when the event occurs with respect to the conflict, then you address how is it that we're going to try to avoid the conflict. And one of the techniques, and I don't want to hamstring us because there may be multiple ways to handle a conflict, right? One of which might be just engaging a third party to go through all the proposals and make a recommendation. That may be one way.
Right.
There may be other ways that I haven't thought about here today.
Okay.
But I think that if we start, I think you could probably put some language in there about generally there may be times where the borrower may end up in a conflict type of situation, and we'll address it, but I don't want to get too drilled down with too many rules and regulations in a loan agreement with respect to a conflict until I know what the situation is and how to deal with it.
And that makes sense. And just to be clear, I wasn't suggesting even if it was legal that we do that, because I also could make the argument too that even if we don't own an equity piece, but we're a creditor to a company, then we want to see that company succeed. So there might be some bias in selection as well. So I think you know, if we can, it's just something that needs addressing, I think. So I don't know if we need to include that at all right now, or I understand what you're saying about maybe we wait till it happens. If that satisfies the rest of the committee members, that's fine with me too, but.
Mayor Buczynski.
Yeah, thank you, Chairman Weber and members of the committee. We're not going to own a controlling interest at any point, and I think, you know, as we do, if we do any proposal, it's going to be the lowest price of a capable company. So I think waiting until it happens and dealing with it at that point probably makes a lot of sense. And I guess I don't have share the same concern to that level, but it could certainly happen. So
Currently, that's not part of the motion. Are committee members comfortable with what's been discussed then in relation to the conflict of interest issue? Any further comments or questions about the motion then? Hearing none, all in favor signify by saying aye.
Aye.
Aye. Aye.
Opposed, same sign. Motion passes. With that, I believe we've done enough work on that piece, and we'll move to agenda item 4. Accelerate loan request, First Eye LLC. Ms. Richards?
We do have the executive session language posted. I don't think we need it, but I just wanted to make sure that if you felt that you did need, for some reason, to talk to Mr. Gaster about, you know, some particular, that was there. But I think, kind of as Keith summarized earlier, they have been very generous applicants with their time. And so with the action that you just took, we would certainly appreciate a motion to move them forward to the JDA for action. Given what was discussed, I think the staff recommendation would then be that you approve their application with a convertible note with the terms that were just discussed.
Very good. And Mr. Gaster, welcome. This
Hi, good afternoon. How are you guys?
But we've had all along a great deal of enthusiasm for this company and this application. We had a series of issues that we wanted clarification on, and I believe with the last motion, we now have that clarification. Is there any further, Mr. Kvamme, please?
move approval.
We have a motion.
Second.
And multiple seconds. So take a second for Mr. Holt. With the motion on the floor, any further questions or comments?
Chair Weber, do you want to describe to Mr. Gaster what you just approved previously? I'm not sure if he was in on it.
That's probably a good idea.
You may want to, I'm just, for the record, so he knows, when you do approve, what you approved previously.
We agreed if you make money, we get half of it, John. And yes. We've agreed to the 20% discount rate, which was your original recommendation. We have agreed that the raising of the LIFT funds will count as the match, and that also fulfills a minimum equity position, which was the third part of the motion. And I believe that's what we were talking about, Mr. Phelan, yes? Very good. So I think that's in line with everything that we've discussed with you in the past and doesn't go beyond that line. Yeah. With that, we do have a motion on the floor. All in favor signify by saying aye.
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 Opposed, same sign. Motion passes. Mr. Gaster, you don't get to put any time on the clock today, but thank you for joining us, sir.
I was going to say, these are public meetings. He can keep coming. Since
You
he's been
can
to
keep
like
coming.
8 in a row if he wants to.
It's also worth noting for everyone, the Growth Fund Committee does just make recommendations to the JDA. The Jobs Development Authority does have the final, the role of making the final decision on this. And we anticipate that meeting will occur next Monday, the 19th, July 19th.
Correct.
Very good. All right. Thank you, everyone. Which takes us to agenda item number 5, authorized public sale, Corporate Center 2 at 402 Demers. Ms. Richards.
Mr. Chair.
Yes, Mr. Wolf.
Mr. Wolf, I would request that I be recused from any conversations regarding Corporate Center 1 or 2.
Very good. We have a request to recuse Mr. Wolf.
I'll move approval.
Motion from Mr. Holt, second from Mr. Kvamme. All in favor signify by saying aye.
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 Motion passes. Very good. Ms. Richards.
You have a very brief staff report before you. The request is to authorize a public sale of the Corporate Center 2 building via a public sale with sealed bid with an auction to follow is the recommendation in broad strokes. This would be handled by the city attorney's office with assistance from local firms as needed. We do have, an appraisal was done, I believe a year ago, January. That was recently updated to confirm that the value of, and this is just Corporate Center 2, not Corporate Center 1, is valued at $3 million, and so that would be the targeted sale price. If you have any questions about the mechanics of how that would work, I'm going to refer you to our city attorney, but that is the request, is to, as we've been talking about this for quite some time, this is movement towards that public sale that would get the Corporate Center 2 building in the private sector's hands.
Very good. Thank you, Ms. Richards. Mr. Gaustad, for myself, a $3 million minimum target is how I'm viewing this. If we get bids that come in under that target, are we obligated to accept those bids?
No, okay, part of the process that you do in a public auction type of sale is, in most governmental entities, they reserve the right to reject any and all bids. And so you'd go through the process, you'd have a sealed bid, this is at least what I'm thinking anyways, you'd have a sealed bid process, try to set it up in such a manner where only serious bidders show up at an oral bidding process. So you don't throw in a bid for $10 and you show up just to hamper the process, so to speak. Go through an oral bidding process and try to get to the highest bid. And obviously at that point, everything would be subject to approval by the JDA. So we'd get these bids and we'd still have to get the okay from the JDA with the target, the $3 million. So it could be below that number. Hopefully it's going to be higher than that number. And part of the analysis, I reviewed this, is I know that the JDA has gone through the process before and sold property without going through the public auction process. But in those contexts, either you had you already had options that existed, or it was in the context of economic development or development for employment. This really doesn't fit within that context, and given some of the interests that exists with respect to this property, it just seemed logical to me to try to do it through a public auction process that you'd normally utilized by the city of Grand Forks for real estate.
Very good. Thank you, Mr. Gaustad. Further questions? Mr. Crary? Thanks.
Yeah, I would, Mr. Chairman, I would actually like to recuse myself as well, just as there could potentially, a brokerage could represent the other side of the coin and represent a buyer. So I don't want any perceived conflict of interest if our brokerage is representing a potential buyer, so.
We have a request for recusal. Mr. Gaustad, before I move on that, before I take action on that, we have a quorum, but with 2 members recusing, we would be down to just 3 of the 7.
Troubles me, and I don't know, and with all due respect, Mr. Curry, I don't think I don't think there is a conflict with respect to approving a sale by public auction.
Okay.
And so I'm not trying to put you in a box, Mr. Curry, but I just don't see that as authorizing the sale to go forward. Doesn't necessarily create a conflict for you in being able to participate. And you've disclosed the other way we can handle this, Mr. Chairman. If you do believe that there's a conflict, the law actually says that those that don't have a conflict can vote to allow Mr. Curry to participate in the voting process. So if you wanted to have a motion to allow Mr. Curry, given the potential for conflict, to allow Mr. Curry to vote, that might be the way to handle the situation as well.
You've been trying to educate us on this for over a year now, haven't you? Yes.
Yeah.
Very good.
And right, obviously, as of right now, of course, there's no conflict, but I just want to make sure that, yeah, obviously there is potential there, just in our line of work. So I just want to make sure I'm totally forthright too. So whatever Mr. Gaustad's recommendation is, I'm comfortable with too.
So do we have a motion from Mr. Gaustad?
Yeah, I think a motion to allow Mr. Crary to participate in the vote would be, it's a belts and suspenders type of process.
Make that motion.
We have a motion from Mr. Kvamme,
Second.
second from Mr. Holt, and questions?
Well, I was just wondering, I mean, if Mr. Wolf has already recused himself from this discussion, do we have enough people to vote on the motion to allow Mr. Curry?
We do.
But
We'll have
Mr.,
4 of 7.
I think Mr. Wolf can participate in the vote on whether there's a conflict or
Very good.
not.
Okay.
That's the question before the committee right now.
Very good. So, Mr. Wolf, we would be asking you to vote on this motion. And with that, any further questions or comments? Hearing none, all in favor signify by saying aye.
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 Opposed, same sign. Do we allow abstentions on a vote of this sort?
If somebody abstains, they're actually deemed to have been voted in favor of the motion.
Okay. Abstentions?
Aye, if you,
Very good.
sorry, I was on mute. Aye, if you're referring to me, Mr. Chair.
Oh, I'm sorry, Mr. Wolf, I couldn't hear you very clearly. Your vote then was in favor of the motion?
The motion on the table with Mr. Crary, yes, aye, I'm fine with that.
Very good. With that, now we'd be looking for further discussion about item 5 or a motion to authorize the public sale.
I'll move to authorize the public sale.
We have a motion and a motion from Mr. Holt, second from Mr. Kvamme. Any further questions or comments on this motion? Hearing none, all in favor signify by saying aye.
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 Opposed, same sign. Motion passes. Very good. And with that, unless there's anything further,
Motion to adjourn.
motion to adjourn.
Second.
Second, meeting is adjourned, and Mr. Surtak, thank you again for joining us today.
Excuse me, could I get the motion to adjourn?
Thank you.
All in favor of the motion to adjourn?
Aye.
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 Opposed, same sign. Meeting is adjourned. Thanks.
Awesome. Have a good one, everyone. Thank you.
Thanks, Mr. Curry. Bye-bye.